And I've just got the US index chart up here now, thanks to Samtrade. And this is just the 1 hour time frame. And as you can see, just from what's been going on, we are still very much, range bound. We do get some decent moves in regards to what we saw earlier in the month. And we had a nice little run up, although the CPI data that did come out yesterday would be best classified as quite neutral. What we have also been seeing in the context of this is what could best be described as a risk-off sentiment. Now, obviously, what has been going on with the equity markets, especially in the US with the S&P 500 and the NASDAQ, the Dow Jones, they continue to push higher and higher and higher. And we've just seen that easing back a little bit. And yesterday, there was a couple of trade calls made that I personally took on the Euro Aussie long and also the Aussie short. And we could see that very much break further down after the release of the inflation data as well. So there's still some pressures there that, the Federal Reserve talk about transitory inflation and the like, but it just still seems there are some things that are going to be held in place where the costs of certain things and production is going to sort of hold, and something will inevitably have to be done. And they're talking about tapering where they're going to ease this money printing in November, but we'll see. That could happen sooner. And again, that's going to really most likely lead to some US dollar strengthening. But for now, in regards to a trade on the index, it's still, very much looking like it's not as clear as if it was, still high inflation. Then there'd be almost, a easy suggestion that the US dollar could go high. But, for the remainder of this month, it's going to have to be closely observed, and an easier way to play this would be just to watch for what the equity markets are doing. I mean, the Australian stock market right now, the ASX 200 has pulled back a little bit, but there's not a huge amount of concern because the dip buying mentality is still very much present. And I just want to share one thing as well. I wanted to share this yesterday. So what I've got here, guys, is the report from the Commodity Futures Trading Commission. Now, what this is showing here, in green, we've got the long positions, and in red, we've got the short positions. So this is really the inflows and outflows on the US dollar from a speculative positioning standpoint. So what we can see, so this is from yesterday, and we are still seeing a decent amount of long positions still being held by markets. And then we've also, now the Commodity Futures Trading Commission is made up of, there's a large volume that is represented with this. So that, because we have so many different brokers around the world, but this is a nice way to get a gauge on, who's doing what really in regards to the bigger players. And we can see there's been a reduction in the short positioning and, maintaining of the long positioning. So from a standpoint of a trade idea, I would still say that it's a bit hard to say, well, we're going to see a breakout through 93. I would just say that you want to see if it can get back to 93 and then wait for a pullback. And you just play the currency pairs, with the US dollar based on where it is. If it's getting close to this range and there's no real catalyst, most likely we're going to see a pullback again. What's really going to require is something from the Fed saying we are going to have to taper here. That's going to see a nice pullback in equities and a strong catalyst to push the US dollar high, but that could still be really in November. For now, a conservative call would be then. So just play the ranges for now, guys, is my thought process.